domains was low. Doma changing the game. One bridge, one standard, now the systems move the same. Registrar, stay central, keep the trust and control. DNS and compliance, still they play the key role. Traded on chain, let new markets arise. Domain value unlocked. Welcome to DomainFi.
Welcome to Doma OnAir. This is episode 8, I believe. I should have checked that. Episode 7. Sorry, excuse me, jumping ahead of ourselves. But excited to have Chad Folkening here with us today. Really excited to get into Chad's story and talk about a couple of the domains he's recently tokenized. Chad's first appearance here on Doma OnAir. He's a founder of ecorp.com, Global Ventures. He is a longtime domain, another domain OGer here, longtime domain industry veteran, co-founder of Domain Holdings, serial entrepreneur with deep experience in premium domains and digital ventures. Recently launched Disintermediation as well as agenttoken.com on Doma. Excited to talk about both of those today. But before we get started, Chad, welcome to Doma OnAir. Appreciate you taking the time out to join us today. Do you mind? I know I shared some of the high-level background there. Do you mind filling any of those gaps? Anything you care to? You're open, or I know pre-show there you seem like an open book. But anything that I didn't hit on that you'd like to share, or fill in any gaps on the backstory?
The backstory. I think it's 1996 when I bought my first URLs. Right. I think full time since then. So it's kind of crazy that we're at 30 years already. I think kind of just think like you're just getting started, but 30 years ago, man, I was just a young entrepreneur hustling on some other businesses and saw the opportunity to buy some real estate and just started kind of buying as what we could and how we could. And here we are 30 years later, made a career out of it. So
I love it.
Mm-hmm.
Yeah, I'm excited to talk a little bit about how you mentioned real estate there. I'm excited how you view domains as infrastructure. And I know just briefly there pre-show, we got to talking about disintermediation.com, one of your favorite domains. And we talk about these launches. We'll really get into all of it, whether it's those in particular, or like I said, your background there. I am curious, if you don't mind me asking, what can you tell us a little about ecorp.com or Global Ventures?
Yeah, so Global Ventures, GVLLC, is our holding company. That's the parent company that sits on top of everything. And then eCorp was really, I started in 98 as the vision of building these domains into autonomous electronic corporations. Kind of, now what we call them is eCorp smart entities.
Okay.
A lot of people know DAOs, a lot of people in this crypto space, right? So we were building AI DAOs on domains back in 1998. And so that's what the definition is. So it's really a business model of an autonomous corporation on a domain.
Very cool.
And so that was 1998. People were like, what is he talking about? So we never really got into the business to own domains to sell them. We got into good idea. Let's build that into a business. And so that's what really eCorp is about, is building electronic automated companies on domains.
Very cool. Very cool.
So,
I wish I had been, I don't know what I was doing on the internet in 1998, but was not buying nearly enough premium domains in hindsight. But I feel we're early to this tokenized domain world, and we're going to get into that a little bit here today. And for everyone listening in, if you care about DomainFi, AI agents, where this next wave of the domain demand comes from, this is going to be a great episode for you. Like it's not lost on me that Chad, and we've been fortunate to have several other OG domainers here on the show. And while they may have been around and buying domains since 1998, it's some of the OGs, some of that have been buying domains for 30 years, or some of the ones that are first to get what Doma is building. They're first to understand what tokenizing them unlocks, what Doma is doing here. And I think it's rare that you see. I think that's unique to maybe a few other things, but often it's some of the people who've been around the longest and been doing it, for 10, 20, 30 years. We get stuck in like this way it's been mentality, and I don't need to do the new stuff. And especially when you talk about blockchain technology, too many people kind of put up their guards and, that's scammy, or I don't, it almost scares them away because they have some misunderstanding, or they had a bad taste, or variety of different reasons. But what got you into, was it Doma that first introduced you to blockchain tech and crypto? Or tell me a little about kind of your journey into this world.
Yeah, no, actually, you're not going to talk to anybody else in the space that's been tokenizing domains longer than you guys, because it's me. So, um, I was at Jackie Gleason Theater when Vitalik brought up Ethereum,
Wow.
and as building e-corps, we knew infrastructure was important, and so that's when we said, hey, that could be a layer to really build an autonomous corporation, smart contracts, programmable smart contracts on domains. And so we've actually been tokenizing domains for 8, 9, 10 years now. Originally on Ethereum, then on Binance, and then on Base. And then when Fred came to me about 3, 4 years ago, when he was coming up with this idea, we've already launched 2 or 3 different tokens. And it was never really about trying to, get the hype. It was like learning new technologies, what works, what doesn't work, what's the capabilities. And so we started like the Realty DAO, we started Contrib, and we really were trying to turn our visitors into contributors. So we were trying to change the business model from pay-per-click parking and click-through rates that were really horrible or horrendous. It's like, how do we turn these 95% of the people into contributors into this asset? And the only way to do it, and so the problem was we were so early. There weren't a lot of wallets. There weren't a lot of people that understood it. And the share ownership, that was the only way to really do it in an autonomous global way. And that was the Contrib token, the CTB token in Ethereum. But then the gas prices started getting, $20. That's when we moved over to the Binance, created another token. But we never really got in it to push it to try and leverage the token. It was really trying to bring the tools, bring the capabilities in, and then see if we can catch it. But we're always too early. We're always 3 to 5 years early. So when Fred came to me 4 or 5 years ago, whenever he was proposing, I was like, listen, there is nobody else in the space that's going to tell you what we've been building dApps since Ethereum kind of came out. We were actually building it on eShares.com.
Wow.
That used to be a company that had to change their name, called Carta now, and Carta was called eShares. And so we were already kind of doing blockchain, but it was on a centralized database. And that's when we're like, hey, well, let's put all this stuff on chain, cap table called eShares. And so for us, we just used our own internal blockchain to measure value, contribution value on our domains. So that was our original forte into the blockchain space, 9 years ago, 10 years ago.
It's amazing. Super early. So you were early then. You said too early. I still feel we're early to tokenize domains. We're early to maybe this specific niche within the the blockchain industry, on-chain industry. I don't know, but we're not early to crypto. It feels like crypto and blockchain tech, it's really hit its stride, even in the last couple of years in terms of regulations. And we saw, I think, recently we were talking this morning that Moody's is bringing their credit rating on chain, and you got, RWA's taken off and tokenized equity. So it feels to me, and I'm a little biased, but it feels to me that crypto, blockchain tech's hitting this critical mass moment and really taking off. There's so many tailwinds. That said, where do you feel are we still early with tokenized domains? And if so, where's it go from here? How do you envision kind of maybe the next 4 or 5 years playing out when it comes specific to tokenized domains?
Yeah, look, it's infrastructure, right? So it's the infrastructure now is there. Now you can have distributed systems that do billions of dollars of transactions a day, Uniswap, look, there's a lot of learnings from crypto that are now carrying over into the enterprise and just the bigger market. But the infrastructure layer, we're already seeing it work with payments going that way, with MasterCard and everything, right? So that's just maturing into an infrastructure layer. It's how do you unlock assets? A lot of people ask me all the time, early days, is how do you invest in crypto? And so it was always like, try and find an underutilized asset nobody appreciates and bring the new technology on top of it, like real world assets, right? Now with, perps and these other things, now you're starting to see these derivatives and these other assets that are now getting unlocked, and they're getting value unlocked, utilizing these technologies. and the wallets are getting better, and we're just more mature than where we were even 5 years ago, 10 years ago. And so we're already starting to see that right now. You don't have to educate people on, should I be in this? Should I not be doing this? Is it my fiduciary duty to embrace this technology? Now it's how is AI with blockchain and the asset, really creating a value proposition on underutilized assets. And we've always said domains are digitally native assets. We call them DNAs. So, DNAs, domains, digital native assets have always been infrastructurally aligned with crypto and AI because it's not a house. A house is a physical analog product. A house is not a digitally native product. And so domains have that inherent digital native infrastructure that complies with the new technologies that we're starting to see. Yeah, that's why I think we have the upside. That's why I think there's upside potential on bringing these and tokenizing them is that one other next layer to creating utility and other opportunities for those assets.
Agreed, wholeheartedly. It seems so obvious. It's just such a natural fit, and it's not just putting these domains on chain to say you put them on chain just to ride some wave or add some buzzwords in a pitch deck. It really does unlock tremendous additional functionality. And earlier you mentioned like that active participation, like something that was very difficult to do prior to this, unless you were building a business, it was some sort of social network or something like that. It was hard to involve others as active participants in these domains that Doma's unlocking here. I know I didn't realize quite how extensive your background in crypto is, so we kind of jumped into things hot and heavy there. My apologies. Couple of warm up questions for you before we get back into more of the technical stuff. Weirdest domain you've ever owned?
Weirdest domain. Weirdest domain. Well, we got a little over 20,000. I think I know them all. But I can just it's always those ones you can never remember the one that you just okay, you should just start throwing. Like we put like felony.com, we're putting that on Doma. So we have 10 of them in the rear in Doma right now, right? That are in the holding patterns. Like felony.com is an interesting one because it's where could that one go? And then there's some that you see that oh my gosh, I own that one. But look, I'm pretty proud of the ones we've brands that we've built that we've sold to Amazon, 2 different names, Disney. Wow. We just sold Elon Musk a name. So we've had a lot of success selling to enterprise on brands, right? And so some of those streaming.com is one of those. So weirdest one, good question. I don't really know. Just felony is why would I own that one, right? But then you start looking at it actually that's a pretty good opportunity because if you get a felony, you're 10 grand in the hole in attorney fees, right? So you're looking for those ones that are it's positive. They can go a couple of different directions, so I don't really have any outliers that are weird.
That's a good one. That's a good one, though. What about one? Is there any domain that you regret selling or not buying?
Renovations.com at $5,000 when that guy was liquidating domains. And you snooze, you lose, right? There's that's when
what does that go for today?
$500,000.
Wow.
$500,000 probably at least. But no, but you got to know who owns it right now. The person that owns it, it's 2 million, right? So, but those were going, 5,000. Somebody was liquidating, and it's if you don't jump on it, there's other, that's the beauty of it, right? It's a global market. So, if China was really hot, you would see a lot of Chinese buyers coming in. India got hot there for a number of years, and so we did start the largest outbound brokerage company in the world, Domain Holdings, and we sold that to Flippin' 99 Designs, and we had 26 brokers at the time. So we were seeing a lot of flow, which buyers. We saw India pop up, we saw China pop in, and those are different, asset classes that people like and stuff. And so, it's really those ones which domains can last the test of time. And we're starting to see that kind of pattern play out. But what really interests me is those ones that are like still $10 that you can turn into a $100,000 business really quick, right? And those are the ones you could still see opportunity or feel opportunity in the marketplace by buying a kind of a name. And now, especially now, with tokenization and AI on a URL, get distribution, and take a $10 name and make a lot of money on it, like in own identity and stuff like that. So I think it's every time to dangle carrots in front of me, they're like, hey, I come right back to the domains, because it's like this is where my niche is, and this is where I still see a lot of opportunity to increase the value of an asset fairly quickly.
Yep, no doubt. So shifting gears back a little bit, I know you were at Dominion this year, not just this year, you've been to several of them. What did you think about Dominion this year? You had Web 2 domainers on one side, you had Web 3 and on-chain builders on the other. What was your honest read of the room? Any big takeaways or follow-ups from Dominion?
Yeah, knowing Fred from the past, he does his parties really good. You guys probably wasted a ton of food there.
I've been to hundreds of conferences. I've never had a spread like that. Every meal was
great. No, it was great. That's what I'm saying. But there was so much of it, right? It was just like, oh my God. And so look, Fred always takes care of, the customer base and stuff. So he's always done that historically. And so, I think I like the blend. Like I was always, when I was in the domain space, you can't talk crypto because people are like, what the hell is he talking about? Then you're in crypto, you can't talk domain space because I don't want centralized assets kind of here. I want to stay decentralized, while they're buying $10,000 JPEGs, I don't mean shit, right? It's kind of the ones now we're at that, the blending of bringing it together of, digital domains assets with blockchain and AI. So I think Dominion did a good job of bringing that kind of mix together. And versus one being either crypto, one being just domains, and so that's where I think you guys are the trend line is bringing those a little bit of both into the mix, which is nice. So
yeah, I know you said, at least in your early business, you were not just identifying good digital real estate or good names, but what things you could build a business on top of. I don't want to put words in your mouth, but what if you were to, I know there's also a lot of variables, but if you were to pick like one thing, or maybe not one thing, what do you think separates a good domain investor from a great one in your view?
A good one to a great, well, I mean, look, some people just jump right in, right? And they waste a lot of money learning on crap. Like if they could have, look, I've seen the best. I have to compete against the best. People like Frank Schilling and these other guys, all had a little bit different. They found a niche and they exploited it. And so I think, some people are all data driven. Some people are brand driven. Some people are, relationship, so I think if you look at the pattern, especially even if you bring crypto and you got to be early, the earlier you are and you catch the ride, that's how you get alpha. And so, and then you got the newer people coming up that, what are their resources, right? Are you building it internally? Are you building enterprise? Are you building so what's your strategy, right? I think you got to pick a strategy and you got to really go into that strategy with some knowledge. So when we would see people bring portfolios, these are I don't renew any of them. These all are shit. Go drop them all, buy one good one, build it up, go from there, right? So I think it's, the great ones, again, they learn, they educate, they have a plan and a strategy, and they go execute on it. And then your timing is important. So, we have a lot of names now that are like loop names that we bought or chain names that we bought 29, 30, 25 years ago that back then were, nobody well, why is he buying this shit, right? And all of a sudden we have these, loop names and chain names that are coming back because recursive loops and, what we're seeing now are starting to now increase our portfolios. They're like, why did you buy that 25 years ago? And so you have to hold on sometimes to those verticals or those keywords to really extract the maximum value of that portfolio. And And look, I'm dropping names that are 20 years old that I paid $200 for that are going to go to zero, right? That are like that cost me $200 to carry that I didn't use. And so I think it's how do you reload, how do you learn, how do you adapt, adjust your plan, execute on it, and those great ones follow that. I'd say a similar pattern versus buying over here and scattering and just because just buying a domain to put it on a thing is. That could be a model, but that was a model probably 15 years ago when pay-per-click was really solid. And so I would say less is more now than more is more at this point.
Makes sense. Where, you mentioned, some like different demographics or different regions driving, cycle pops at one, different times. Is there been any big lessons that stand out from past cycles? And of those, anything you feel like, on one side still holds true today, and then maybe on the other side something that's just broke or completely changed and no longer is true that might have worked in past cycles?
Well, everybody pays the same for a domain theoretically, but the currency that they pay in is different. And so the value of a dollar to me is the dollar is different than yen and whatever else, right? So I think that's what we started seeing the patterns when we started analyzing it. Is a $10 domain name might be 20 cost more to somebody in a different country, and so you got to. So again, that's the beauty of domains is they're global, and so you started seeing patterns that people in China didn't want to box themselves into a .cn name because you would know, and then security routers would block you and everything else. And they're like, well, why would I do that? Just buy .com and I'm global and I don't have to box myself into China or India. So that's that. And so in the early days, when at 96, 97, 98, when I was doing it, I went to Europe and I was like, what is the distribution of .com versus another TLD? And you kind of, can I bring this .com into a global market? And so I think that got established over another 10 years. You could take that URL and bring it to a global market to where another TLD or another country code, you really couldn't bring it in the United States and build a business on it. So I think that still holds true today. I mean, now that we have other TLDs, can you give me a napkin, please? To where now again, like Doma.xyz and then who's on Doma.com. So now I think we're starting to see that vampire attacking with like Sushi Swap did with Uniswap. Boom. And so now our competition is the people with the same brand identity, maybe in another market. But it's also could put your potential partner too as well. And so I think the opportunities are still there. I think it's just the history is kind of playing itself out to like what are solid. Again, I wouldn't want to take a TLD into another country and have to fight 3 times as hard to get my distribution established in that country.
So to that point, let's say someone's tuned in today and they're just getting started in domains. They're just getting started with their domain portfolio from scratch in 2026. What would you tell them to focus on first? Would it be premium domains like .com and .ai? Would it be other TLDs? Would it be maybe you go for something niche that you can then sell to someone else that has the premium domain in the same space? Like where would you, and maybe it's different for every person, but any recommendations for someone just getting started on what to focus on in 2026?
Go with what you know, right? Go with what you know that you can enjoy doing something with. And so there's a lot of domainers have assets that they don't want to sell because they enjoy it and they like to have it, right? So other ones, it's not an attachment to them. It's how do I maximize the value? Again, so if you're buying it to sell it, make sure there's demand there. Make sure there's not trademark risks. But, make sure there's you're not causing more legal exposure or exposure to you on a negative side, but on a positive side. And then definitely go local. Go with what you know. So if you can pick up a city name or your kid's name or your wife's, like those always have different value propositions than, buying the flip. So that's what I'd recommend, is go and then learn, right? Like I said, like if you know comps and you know what that one just sold for, and you can see the comps, then maybe the next one that comes up, how you can pay. Like I've been trying to look to buy a boat, and it's like, man, that's a really competitive market too. And so somebody else has more data than me, or has a different distribution strategy than me, or a different customer base than me, because it's like my price was way lower than what the markets of the boats I've been bidding on, because they either see the value in it differently, or they have a different sales technique differently, or, I don't know. I'm not really quite sure. It's kind of the things I'm trying to study a little bit better to make me maybe a better bidder on a boat I'm trying to buy. To where on the domain side, I have vertical keywords. I monitor. I have, a lot of comps. Again, we've sold over $100 million in domains, so we have kind of comps. And so for me, again, it's the keywords, it's the verticals, and do I enjoy? Because at the end of the day, you're still spending money and you're still making an investment, and that investment can be either spent on that asset, or you could buy stocks or bonds or gold or derivatives or whatever it is, right? So it's just, you can enjoy your investment, whatever the asset is.
It's good advice. What you mentioned data there, and I mean, you're obviously a very tech savvy individual, early to not just domains, but Ethereum and blockchain tech. Are you using any AI tools currently, whether it be to like help estimate your domain prices, or in any way in like your daily domaining routine? Talk to us about AI and AI tools. Are you using what are you using on a daily basis?
Well, we have it's called Agent DAO. DAO. So agentdao.com, and the ADAO token, ADAO.ai, is on a base token. It's only for agent and bot names. And we have about 548 agent and bot names that make up this Agent DAO. And then inside there, we have contentagent.com, socialagent.com, codeagent.com, list agent, refer agent, yada, yada, yada. And so we really build agents on URLs. So but again, we call them E-Corp smart entities. And so other people call them agents. And so we started with OpenAI because they were the first kind of one that was really getting reasoning down. And then we've been using Claude Cowork because we have cowork.com and it's more integrated. And so we've been staying really those two. We know Google's coming up with their Gemini, just because they're integrated in and they're in that stack. So again, at the end of the day, which one of them increases the value of our URL? That's all we really care about. And so they all have their strengths, they all have their weaknesses. Pick the right one. But yeah, we're building a network of a fleet of autonomous smart entities to build. My goal is build an autonomous digital real estate company. I mean, that's it. And so we want to build in 2 to 3 years. We have a product called Co-CEO, coceo.com. And so Co-CEO is learning right now off of all my patterns every day. And so every day we do a debrief and we send it up to our Learn agent, our Learnly. And then, so for the next 2 to 3 years, all it does is study my patterns. And in 2 to 3 years, I want to be able to turn it over to basically run an autonomous venture building company. It's
amazing. I love it.
So right now it's not, so we're doing actions, but it's every day. I'm in it all day, every day. I'm frustrated. When you start cursing at your AI, it's like, you love it and hate it when you start cursing at it. So look, it's a tech stack, but it's a tech stack that I think could 10x, 100x our domains. It gives me new excitement to get back to work and work every day.
Yeah.
So
very, very cool. I can hear the passion and enthusiasm in your voice, and it, not to put words in your mouth, but for someone who's been in the domain space for, since the late 90s, it's almost like a wave two, a phase two. It's I don't know, again, not to put words in your mouth, but reinvigorating you in this business and being able to do it another way, right? Build be early to the next phase of domains and just tech at the highest level.
Yeah, well, just for reference too, right? When Fred mentioned to me in Miami about doing this, I was like, listen, I don't want to be the only one that's tokenizing domains and see the value proposition of it, right? That's why we support it, because it's such a big market, and rising tides raises all boats. And to do it, and you can do it a different way, different technique, different things, right? So, like that's why we're supporting it and putting some of our assets in there, and some really good ones too, that we see, because again, it's a rising tide to like the more tokenized domains, the more my agents can play in this marketplace, right? So it's not where we're at now; it's where we're going to be at in 2 to 3 years, and so that's where interoperability is an important factor of stuff, and so I think those are more important things for me than like potential competition. It's like, no, it's not competition, because how you tokenize something, there's different ways to splice it. You can program it different ways. You can have different structures to it, and that's what you guys are learning too. Because I was in the initial files where, hey, you have to convert it to USDE, like that whole usability is getting a lot more streamlined with you guys. And I'm seeing that on the usability of that. And that's the stuff that I support, because building stuff is really, really hard. And there's not a lot of people in our space that build shit that's going to increase the value of the whole entire industry. And that's what you guys are. And that's why I've been supporting it from day one.
Well, it's been one of my, I think probably one of the things I'm impressed with most about Doma and what they're building is exactly what you just described. It really does feel like it's very much so a collaborative approach with leaders throughout the industry, and so many they get it, just makes sense, and realize it's an opportunity to push the entire space forward by working together, as opposed to some sort of PvP infighting. But speaking about these domains and Doma, you've launched at least 2 that I'm aware of, Disintermediation as well as agenttoken.com. Let's talk about these. I can pull them up here on the screen in a second, but let's start with disintermediation.com. I know we talked about this a little bit pre-show. What does that mean to you in the context of money, the internet, domains? What does it mean to you?
Yeah, it wasn't mean, the first one was going to be crypto degree or cryptobroker.com or cryptocollege.com, but we didn't get into, I don't know, Jebediah was like, hey, something didn't happen. Like we didn't bond or something didn't happen. So that wasn't really originally the first one. And so I think that's a 1998 domain for me. And so it's kind of like in the early industries, like VARs were value-added resellers, right? And so so if you're sitting in the middle of a transaction, you better add value. Otherwise, those transactions will find a way to disintermediate you because you're not adding value. And so that is really the basis of disintermediation, is cutting out the middleman, period. That's all it means, right? But that is technically the definition of peer-to-peer. And so when peer-to-peer came out around that time, 99, that's when you started seeing Skype and these other peer-to-peer communications apps were using the internet and IP internet protocol to transport data across the internet. And so I started seeing this, like, that is a platform that will revolutionize every industry, period. That's what it. And so for me, that's why I bought it, and that's why I've always enjoyed that one, because it's not necessarily the domain, it's a long domain, it's the meaning of the domain. And that's all you have to go is, if you want to learn, why did that guy buy it in 1998, right? And so we've been doing peer-to-peer systems since 1998, theoretically. And that domain helps define the terminology of that business model architecture.
Yeah, it almost seems like not only you've been building in domains since 98, it's almost like what you've been building, how you've been building is almost a perfect tie-in to Doma and everything that they're doing now. It really is, not to be cheesy or as the kids say, to glaze you while you're on the screen, but just really does seem like a perfect fit. And cutting out the middleman, like everything you just said, it's so crypto native from a meaning and a name standpoint. On the other side of technology, you're just talking AI and agents. Let's talk about agenttoken.com. When did that idea hit you, and what was it that clicked about this particular name?
When we met Jebediah and them in Vegas to kind of go through the list, going through 20,000 domains. It's like, okay, like what can we look at? What can we put on here? And so one, we kind of wanted to target towards that industry, the crypto industry, because again, we're still a small market, right? I think the more people are going to have more wallets, right? You're not even going to know you have a wallet anymore pretty soon, a crypto wallet. And so I think, so we wanted to kind of target that market group. And so we also have bot token that's coming next. Okay. And so bot token, agent token, and then a crypto college, cryptodegree.com. So we put some of those names that were related to that industry, to hopefully that some of your initial customer base would understand that, right? And so that was really it. Is we wanted to put them on there because look, I've tested what I've learned was, you could put really good domains on there, but if they don't understand it or see or find you, or don't think the value, what is the value of something, right? Like a lot of people don't have value. It's hard to determine the value. That's why I think you guys are working on some appraisal systems, and some other ways to measure a value proposition. And so for that one, we're like, hey, let's throw some on there that are lower valued, or like that have meaning, but that have some more upside and more community involvement. So we're going to bring some other names out. They're going to be, the community is going to be able to own. So we're going to sell like 60-70% in the initial bond. Well, because again, we want to be distributed. I want to be distributed. Like centralized.com is one of our assets where we've been like, hey, we want to become decentralized. But you don't start centralized to become decentralized. It's hard to do that unless you start in the initial phase like Bitcoin did. And so for us, like to go with like bot token, lower names kind of meaning in the industry, can we take those somewhere where if it gets momentum, we want to start selling those to the community and really make those true DAOs, where it's distributed, where we only vote 15, 20, 30% of our tokens to decisions. So we want to bring contributors in that are adding value and share that value. And the blockchain is the only thing that can do that accurately 24/7 and transparently. So cool. That's why we put those two on there: bot token, agent token.
So, I mean, and one of the things I find unique about and interesting about Doma is not just tokenizing these domains, but the ability for the community to spin up subdomains. And something like agent token, I mean, just I can think of a lot of ideas just off the cuff of like where a subdomain for agent token can come into play, and just by holding some of those tokens, that the community is able to do that, and then who knows what ideates from there when you have dozens or hundreds of individuals building out subdomains for this, and one of them pops off, it's going to, in theory, draws attention to others. It value accrues back to the main domain and those token holders. So I guess if you had to go ahead.
Well, I think just not just humans, right? What happens if somebody writes a program, right, that can spin up 100 agents on a subdomain and mint it, right? And so, so I think we're already starting to see it. Like we're already starting to see some pretty crazy applications. Applications.com is another one in the pipeline right now. That's in the Interstellar right now. We're prepping that one right now. So like applications.com is another one that's coming on board in Doma. And so that's what it's really exciting to see, is now we're starting to see so many people that can come up with an idea that you didn't think differently. And so like that's what my idea was. If I could create an agent, create a subdomain, mint a token on it, boom, get it moving. You can scale that pretty quick. You can scale that fast. Right now, it's now timing is being compressed. Time is being compressed. I think the older we get, the more, I wouldn't say more value you value your time differently. I think the older you get, and so I think like, how long does it take? When we sold BitTelect, we had 90 employees, and you would remember going in the meetings for 5 hours a day. I'm like, what did we just get done? Now you could spend 5 hours. Like I just launched an entire company in 5 hours. Like, like, you're like, oh my gosh, like it's hard to look back and now to see where we're going with that. And I think, again, like an agent needs a token. Coinbase and Brian Armstrong just came on CNBC. Hey, we're doing agent commerce now, right? And so, and every agent is going to have a wallet so we're in that next paradigm. And so without tokenization, a domain is just a digital asset that sits in the registrar and maybe a website, but you have to add utility into it. And so the tokenization adds utility into the asset that gives it the potential to go wherever it wants to go or however fast it wants to go.
Yep. I just saw, speaking of Coinbase and Armstrong, I just saw that one of those moves in agents was they just registered the first agent they registered with the SEC as a financial advisor, essentially. And
nice.
Not going to be the last one. It's just like this, the world is moving on chain. It's these agents are going to be do more and more and more. And yeah, very, very exciting time. And yeah, for many reasons, you got my wheel spinning what could become of this domain and several of the others. You mentioned speed and time. Both these domains, they bonded pretty quickly, right?
Yeah, I think so. I didn't watch them, honestly. And again, Crypto Degree was the first one we did. We had some hiccups and it didn't happen. So I was excited on that one. So I honestly don't know.
So what is, I guess, how have they performed relative to your expectations since they've been live? Is there anything that surprised you, whether it be from buyer behavior or liquidity? How quickly people got the names?
No, because I'm not expecting anything, right? It's like I spend a lot of R&D to where you anticipate it's going to fail or whatever. And so like but as long as you learn and bring it in and like you guys are figuring it out, right? You guys got the team that's, smart enough to where people are like, hey, what's working? What's the demand? Like, again, distribution, right? Like if we can help you guys get distribution, more people, more investment money into the industry, and then making it easy to do that. That's where I think, that's where the potential lies in the asset. So this phase, I just look at as more of a phase 1, phase 2 kind of we're in right now. And so it's more of a learning and let's get the wheels greased up and like, let's figure out what's working, what's not working, let's modify it. And that's why I think we're test running these, but we're bringing out better assets even, pretty soon too, that we think are going to have even better and more potential on the upside.
Speaking of learning, any big learnings so far with that Doma's taught you, or that to tokenize these domains versus just holding the domains in a static portfolio?
Yeah, I mean, I think it's like you have to get the commerce down. I think when you guys first launched, it was really hard to use. I told Fred this. I was like, listen, I tried for 3 hours and I'm in the crypto, and it was really hard to use. And so that was in the early days, right? So it's definitely come a long way to where now you can get currency in through the system and making it easier to buy and, boom, boom, boom. So I think that's down. That's down because if these assets can't move value easily, then that's the harder thing. So I think that you guys have done a good job of getting that in into the bank. I think discovery is going to be an important one. I think because the more assets you start adding in, you're going to have people writing code that are looking to ARB. So that's just a natural marketplace that will happen. And so algorithms will try to find assets that are undervalued and write programs to buy those. Look, I think the bot was the one that won at the conference. So I think it's if I've learned anything, it's don't just build now to the human economy, build it to the agent economy, and bring in assets that the agents might like and see a different value proposition than the human might see. So that's kind of my learning that I'm learning to try and adapt to.
To that, what kind of names do you think win in an AI native, agent native world? Like short brandable one word.coms, more clear functional exact match? What what do you think wins in this agent AI native world?
Well, somebody either has a vertically aligned asset strategy that can get synergies by bringing the asset into their portfolio. That's one. So verticalization, synergy. The other one is, data synergy, right? Is it undervalued? A lot of people have some algorithms that they don't even know the domain. They just know what the keyword brings, their TLDs that are taken, those data's out there. But somebody might have a different set that says, hey, a company started this brand, and so humans aren't going to be able to compete against computer programs that are trained to have data that can act. And so that's why I think we have a 2 to 3 year period to really embrace working with the computer programs and building systems. And so, but I think over time, that's what we're starting to see. So you asked me about the learnings. I think that's what, our learnings were let's start building for the algorithms that are going to be coming, if not they're already there. And really defining what that means, because again, my brand, I look at a brand as like, I don't really look at the stats. I look at can I turn that into a really cool business, and what am I buying it for? So it's a different buying approach or a different value approach.
Yeah, I had someone recently, I heard the take, they basically, the high level was, for a while, apps were the craze. Every business, if you didn't have an app, what are you doing? And websites became not quite as important as they were early, pre the app store and pre apps taking over. And now as it comes to this agent world, apps may not even be necessary. In many cases, the websites become more important in an agent native internet. If AI agents are going to transact and negotiate and operate on their own, do you think they need domains as a front door, or will they find a way to route around them?
Well, you need identity, and you need discoverability. So I think that's the thing. And so, look, when 30 years, we've been through 3 cycles of the end of domains is here. And so with those two, identity and discoverability, are those, if those are going away, then we have basically 5 gatekeepers at the edge. And I don't think that's happening. I think we're going edge compute, not centralized compute. So and so I think that ways, and all you got to look at is like when the X402 payment protocol came out, that's an old HTTP pay protocol, right? And that's HTTP pay, right? So the browser, I thought if the browser is dying, then you can say the domains could be dying, but the browser is increasing distribution, not decreasing. And the HTTP pay is becoming the agentic payment layer, not the other way around. And so the HTTP pay is a browser-based payment mechanism. And so if I was saying that was taking it offline, I would say, okay, maybe, but the commerce is going towards the browser, not away from it.
I agree.
And that plays into discovery. Look, it's bad. It's bad out there. Hackers are hacking. People make your phone calls. Don't pick up a phone call you don't know, because you say hello, they got you. They can replicate you. Don't push your number, because they can see your dial tone and they can push your dial tone, replicate your dial tone. It's bad. Like, it's really bad, right? The fact that Anthropic had to pull their thing, that's only going to get worse. So trust and discoverability and transparent, like, that's why, the thing, as a human, I look to see what's the URL coming from, right? If it's a whatever or new, you just throw it away right away, right? So I think that accountability and that is going to be an important part. And I think domains that have accountability are going to go up in value. So that's just going where the market's already there, and people are seeing it. So you don't touch anything that's not from that vendor. If it's not, that's why I think discovery, people that get it, some people don't, and some people are like, dude, you're losing so much traffic to us, and it's a security risk. Luckily, I'm a white hacker, not a black hat hacker, because I would be sucking down all your data right now, and the 30% of the people are like, sometime they're going to have to figure this stuff out. And so the URLs would become more of a trust layer of the root of truth layer. And when that happens, the domains that have history and transparency and accountability are going to be more valuable than the $10 than the renewal fees are.
Totally makes sense. And it's going to become, I think, increasingly important as more agents start transacting. I mean, there's already more bots on the internet than there are humans. That's likely to grow exponentially, or that gap is likely to grow exponentially. I know we're running up against the top of the hour here, so I want to be respectful of your time. Really appreciate it, Dave. Really, truly enjoyed the conversation. For anyone in the audience, if you have any questions for Chad, go ahead and drop those in the chat now. We'll do our best to get all of them answered. I've got a few more questions for Chad, so we can see if any other questions from the audience come in. But Chad, if you were to pick like a category, what do you think is maybe the most mispriced category of domains currently?
Mispriced domain categories,
or either mispriced or maybe biggest opportunity? I mean, you mentioned accountability. That accountability domains. Like, maybe expand on that. What do you mean by an accountability domain?
Like one that's like has its own value proposition that's not arbitrary inflated. Like a lot of people sold portfolios that were arbitraged, and then the owners would get it and be like, "Oh my gosh, it's this traffic is not even 1/3 of what it is," right? So it's a naturally true asset that has like it's not arbitrarily inflated by funneling shit in, right? That's why, like, when on Shark Tank, like, how much did you revenue make? How much did you actually spend on advertising, right? And so like so I think like those names, that there's some names that have just really true raw value. And so like, and then look, we're starting to see it in the drop catch markets. So those are now, it seems like higher now. We've raised the bar on that, because now people are like, hey, yeah, I can take this asset and arbitrage it with the real raw value that it's already having. And so so I think those have a natural inherent value. And then the ones, again, it's, can you remember this, right? There's so many times on the radio test still that, like, can I remember it? Like, can I go back to it and see it and trust it and feel it and interact with it? And so I think those are the ones there. Now, see, like what I've never got is, like, on the drops, like, there's some names that are just horrible, I would never touch, but they go for $3,000 on the drop system because they have backlinks. But like, so like those people are looking algorithmically, and so like I've never got, that's not my portfolio strategy. And so, but those, they're just churning to burn them, and they're buying them just to, who knows what they're doing with them. But like you're not going to build a business on top of that, at least an end user business on those. So it really depends. Like, are you building it for end user? Are you building it for enterprise? Are you building it for, really, what are you building for? And so that, I think, determines the URL. And so, yeah, you can build on any different TLDs, but how and who you're building it to, your customer base, is determined. I think that's an important part of what makes a domain, I think, valuable and accountable.
Yep.
So
makes sense. I know you were early to ETH or Ethereum. I'm guessing familiar with ENS.
Oh yeah. I mean, yeah.
Writer in the chat.
ecorp.eth is my handle.
That's amazing.
So we were the first one to do. We were the first person to do what was it, on a .com, to use ENS on a .com.
Oh wow.
So,
okay.
Ardal.com was the first ENS on ENS name. So yeah, we wish we probably bought more, and we probably dropped a lot that we forgot to renew, and the whole shebang. I think what happened, and we still support it. It's a huge treasury, and I think once you could do that on a .com with the NSSEC, and you can put you could connect a crypto wallet to a .com. I think it tarnished the utility of the .ens. And again, like, I'm always too early, like, and the amount of community and the usability and the utility, like, it was just not there when we already had millions of people coming to our, like, we have to take care of our house versus building where we like. I mean, I don't know. So we still support it. Look, the ENS has been waiting to upgrade to the L2 chain for 2 years now. So it's like, come on, guys, like let's get it going, because 2 years is too long in crypto to get to an L2 chain.
I think you just answered Ryder's question here in the chat, but he asks, if agents need identity, do you think they'll prefer ENS rather than DNS?
Well, look, in crypto, people on the a lot of crypto people didn't like domains because they're centralized, right? They can be taken away. They're centralized. You have to renewal fee. Like there's different value propositions there. And so if you can build a centralized asset, if you have open governance and open rules, right? So as long as you can, that's how we're building centralized domains, is we will tell you how we're going to act, and we're going to act. You can show it. We're going to tell you how we're going to defend it. So I got to throw it out there. If you go to iconnections.com, that is our positioning. It's a big company now. It's a $50 million company that's on iconnections.io, and they tried to sue us for our domain that we've owned for 20 years. And we said, hey, if you go all the way to the bottom, it says this asset is being defended by the agent DAO treasury. And so we are building an open wallet vault treasury for all of our URLs to defend against the bullshit. It's like that one. And so for us, we're trying to build centralized assets into a decentralized architecture to where ENS does a good job, but for us, it doesn't have the distribution that we need, that we already have opportunity in on a .com. So so for us, again, we're trying to do centralized and bring a decentralized, where ENS is decentralized. That's having the issue of launch on L2 because you're decentralized. That's part of the problem of the decentralized architecture. So ENS utility is there on putting it on another TLD of connecting a wall that a human can see or an agent can see. So for us, we have 80 ENS names, and I only use ecorp.ens or E.
Yeah,
so,
makes sense. I mean, I hold some ENS domains too, like the team over there. But to your point, as the tech has gotten better, the reality is you can build a .com today, have social sign-on, someone can spin up a wallet, they're transacting on chain, and they don't even realize it. The tech is fine. It's now been obfuscated. You can hide the tech. You can leverage blockchain technology, do everything you can do on chain, and the end user doesn't know any different. And yeah, I think that, and again, not trying to make this PvP. It was a great question from the chat there. And
look, I think the protocols are different, right? Now the protocols in Ethereum, you can spin up somebody's wallet, right? So when we did it, we were spinning up wallets, and they were like, man, we're going to get hacked. That's going to be bad. And so we went to total adapt that killed 90% of our traffic, because 90% of our traffic didn't know what the fuck a wallet was. And so, but we wanted to go DApp because that's where we wanted to go. So again, now there's protocols where you can spin up wallets and they don't even know to put value into. So I think where we're at. Look, when Ethereum forked to proof of work to proof of stake and did it successfully, that's when I was like, man, this is awesome, right? They're able to basically cut their leg off to get to the future, and that's when I was like, that's why I think you're starting to see, ETH as a programmable infrastructure with ERC20 tokens and stuff. That's why I get excited too, because I still think that's an infrastructure layer that's not going anywhere for sure. It's how do we all work together to get some of this trillions of dollars and billions of dollars in to an asset class that can bring these in to show transparency, accountability, the whole other benefits of what we can see. So,
it still amazes me how they're able to pull off these updates, these upgrades, these hard forks with keeping 100% uptime. To me, it's like the real life analogy of jumping out of the plane and building the parachute on the way down, or I don't know, I'm probably butchering that, but it is really impressive what they've been how they've continued to update, upgrade, and evolve to adapt to this new technology. And exciting times. I think while been around, domain's been around for 30 years. Blockchain's been around for a decade plus. It does feel like we're at a new phase, this intersection that does feel very early. It feels like we're at the grassroots of this next evolution of the internet. We talk about, this addition of not just bots, but actual smart agents and that can transact autonomously. Like it's just a very exciting time for, no offense, but for tech nerds like us, it's what a time to be alive, right? Chad, I got two more questions for you. I'll get you out of here. Again, really appreciate your time. Sorry, going a little bit over today, but great convo. I think I hope the chat's enjoyed it as much as I have today. First question: what is in one sentence answer is fine, or feel free to expand if you like. But what is the most underrated thing happening in domains right now that the market isn't paying enough attention to?
I think the large portfolio of owners are starting to realize that you can't go to your grave with these domains. Yep. Like Rick Schwartz, for example, when his Beanstalk challenge and stuff like that. So I think because there really is 50 to 100 people that own a lot of assets, and I think a lot of us are starting to realize, like, what's the purpose? Do you have meaning behind these assets? And so for me, I think the most underrated is the ability to make an impact. And so, like, we put 2% of our cap table, our tokens, into impact programs like entrepreneurs.org and savingtheworld.org. And awesome. So we don't have to tell you we're doing this. We can show you on chain. And so I think what you're starting to see from me and a couple other people is, one, we're loosening up our portfolios a little bit more for other opportunities like Doma to build their networks out. And then two, the ability to use this technology with these domains to make an impact on society. And it's going to take us a couple more years, but once that integration happens, I think you're going to start seeing people seeing how awesome some of our people in the industry is and how good they're doing to impact society as for good. Awesome. And so it's taking a little bit longer, but it's happening. And several of us are working together to kind of get to that and are making our pledges now to see that through.
I love it. Last question. It's just more of a catch-all for you. Is there anything Chad, is there anything we didn't ask you about today? Anything you were hoping to talk about that we didn't get to yet?
I think for me, as going on an old man now on the other half, it's like being 30 years, and you kind of look back at your entrepreneurship of 30 years. I got a couple of kids. I'm trying to get into entrepreneurship and stuff. Being, cancer survivor, kind of on the other end. It's like, again, respect your time. I think, and if you have the ability to do what's right, do what's right, right? Like, reputations really are an important factor in here. You might get a win on the short term, but people remember who you are. Again, I've had friends in this industry for 25, 30 years. They're my best friends. Looking back, when I started, I'm like, I want to be around good people and good situations. And would you change it? And so I think, like, if you start a new journey or look back, hey, don't regret it. Right. And don't do something for the short term that you're going to regret in the long term. So don't screw somebody out of something you say you're going to do, because the reputations do carry over. And so I think, and there's plenty of opportunities. So don't act like that's the only opportunity. So that's all I would say is just, respect your time. Don't screw people. And if you can do good, help somebody else out, pick up somebody else, share some knowledge, and let's grow the pie together.
I love it. Great advice, Chad. Appreciate you. You've been in the domain industry a long time, and we're stoked to finally get you here on Doma OnAir. For everyone listening in, if you haven't yet already, go check out disintermediation.com, agenttoken.com on Doma. You can see how Chad put them to work. And last but not least, if you haven't yet, if you're on whether YouTube or X, make sure you follow us on X. Smash that subscribe button, hit the like while you're over there. We've got links to everything in the description. Don't park your domains, put them to work. And I know it's early. I know we just came out of Doma 2026, So we got some time until the next one. But if you can find a way to make it to Dominion 2027, find a way to get there. You get to hang out with incredible people like Chad and pick their brains. And it really is, it's been the biggest eye opener to me, not being a domainer. I've held domains, but I've not been in the domain industry, and just the willingness to share from experts, like true people who've built tremendous businesses, hold 20,000 domains, and they're open books. And I think Chad's a great example of so many of the leaders in the domain industry. It's one of the things that's got me so excited about diving deeper in domains is just, it's the vibe I get is there's just a lot of really good quality people that are pushing the space forward. They're collaborating, they're working together. And so we'll be back we'll be back next week. We're going to turn this around quickly for episode 8. But this was Chad Folkening with domain. We talked domains, talked disintermediation, and agenttokens.com. This was Doma On Air, episode 7. We'll be back next week. Thanks for your time, everyone. Have a great day.
Take care.
Buying domains was slow, Doma changing the game. One bridge, one standard, now the systems move the same. Registrar, stay central, keep the trust and control. DNS and compliance, still they play the key role. Traded on chain, let new markets arise. Domain value unlocked. Welcome to DomainFi.